Hey, what's going on? This is Kyle at Projection Hub, and today we're going to be talking about how to get an SBA loan for a restaurant. Now, this video, we're going to cover a lot of things, from what type of SBA loans exist to where to find the right SBA lender, to what documents should I collect, what things should I expect in the loan process, how does the process work, how do I improve my approval chances. So lots of different details we're going to cover in this video. But to give you a little bit of context just on who I am, as I mentioned, my name is Kyle. And before my time with Projection Hub, I was an SBA loan officer. So for almost 7 years, I helped business owners and startups prepare their loan application, collect their documents, review their business plans, review their projections, review their financial statements, and guide them through the SBA loan application process at the lender that I worked with. And so during my time there, got a chance to work with lots of different restaurants, startups and existing restaurants alike. And now for a few years in my time with Projection Hub, we've helped more than 50,000 small businesses create financial projections specifically. But those are a very key part of the loan application process. And so, using that experience, I'm going to talk about that today to try and help you feel a little bit more comfortable as you navigate what can be a little bit of a confusing experience with the SBA. If at any point you like the video, please give it a thumbs up. That really helps us as a fellow small business. And if you have any questions, contact us at support@projectionhub.com. Leave a comment down in the video below. We will answer those as soon as we can. But yeah, we're happy to help you on your SBA journey and point you to the next right step. So without further ado, let's go ahead and jump in. All right, here we go. Now, to help guide us through this video, we're going to be using this free SBA loan application checklist, which is available down in the description below. Again, it's free. I would strongly encourage you to get it, not only because it's helpful to know all the things you need to collect, and it'll highlight the process and all of that, but you'll see as we go through here, all these little links. And all of these links go to lists and resources and videos and guides for several of the different parts of the SBA kind of, process or world that will be helpful to you. So I encourage you to grab this as a collection of a bunch of things we're going to talk about today. Now, we have time-stamped all the different sections of this video. So if you need to jump to any specific section that you're interested in, you can do that. And again, we've linked everything we could think of down in the description below. And in this video, it's going to be kind of, again, through the lens of getting an SBA loan for a restaurant specifically. And we're going to cover as many different parts of the process as we can. So in this video, I'm not going to show you how to write a business plan for a restaurant. We've got a different video for that, and we'll link to that will help you. So we're not going to drill into one specific component, but this will kind of be a coverage of the whole process. And then, you can follow this to a few different points that would be helpful for you to kind of drill into those specifically. So first off, if you have found this video, that means you've at least heard of the SBA before. There's a lot of misconceptions around the SBA. I would say after the pandemic, a lot more people became familiar with the SBA because of PPP loans and all of that kind of stuff. But most people probably still wouldn't really understand how an SBA loan would work. SBA stands for Small Business Administration. That is a federal, bureau or department, and it helps facilitate some financing through tax dollars to, business owners, American businesses. Now, there are different types of SBA loans. So the SBA process, you're not going to the SBA and working with them through your application process. You're going to be working through what's called an SBA loan, intermediary. So that can be banks or microlenders or CDFIs. There's lots of different ones, and I'll talk about them here in a second. So first, let's talk about the types of SBA loans. So there are actually specific types of SBA loans, and I'm not even going to talk about all of them here, just more the ones I think are more relevant and are most relevant for small businesses. The most common SBA loan is called a 7A loan. Now, this is going to be if a bank participates in the SBA lending programs, they're going to offer 7A loans. They can technically go up to $5 million. Of course, they can be much smaller than that. So 7A is what you're going to get. Lesser known loan type are called microloans. Now, these are going to be offered oftentimes by local lenders, sometimes statewide, sometimes multi-state, but a lot of times they're nonprofits, they're community organizations, they're loan pools, lots of different forms they can exist in. The dollar amounts are usually smaller. So for example, my lending experience comes from a microlender. The lender I worked with specifically, we offered SBA microloans up to $50,000 for startups and existing businesses alike. And then we also had a 7A loan product called Community Advantage, and that could go up to $250,000. Then I think now it's $350,000. And so these loan programs have some overlap, but I think separating them in this way is probably the least confusing way to do it. And so, there's some different directions to go, and they have different strong suits and specialities. And something I guess to know about the SBA is you can't get one of these loans without talking to a bank first. Typically, you need to sign off on the fact that you could not get a normal non-SBA loan before you kind of go through that process. And so and I guess I haven't touched on 504 yet, but that is going to be long-term, low rate, but it has much more specific uses. So that's typically for buildings or land or a new facility or long-term equipment, like manufacturing equipment. I believe restaurants can do 504 loans. Excuse my dog, he's sneezing in the background. But 504s are unique because they're kind of partnership loans. They use what's called a CDC entity, and the bank loan is also involved, and then there's a personal investment. And so there's kind of a combination there, and they're typically larger dollar amounts. And so we're going to really focus on microloans and 7A here. If you're a startup listening to this, I would encourage you to do some of the work to learn about microloans. If you're an existing business, microloans are still going to be relevant, but you're probably going to be more in the 7A space, or at least if it's a higher dollar amount. So those are, microloans and 7As can be used for most any of the purposes you're going to need for your restaurant. And so both of those are very viable options. And we're going to talk more specifically about how to find the right type of lender, which obviously here is the next section, but we're going to save that for later in the video, because maybe you're like, I'm not worried about finding the right lender yet. I need to figure out all of the things that I need to actually do to apply for a loan first. Very valid point there. So we'll come back to how to find an SBA lender. Now, these link here to additional descriptions on the SBA website about those programs specifically, if you're curious about typical rate structures and term lengths and that kind of stuff. But you can dig into that more there. Okay, so we're going to skip finding an SBA lender for now, and we're going to come back to that. So let's get into talking about a typical SBA loan process and what you can expect there. Now, kind of, again, this process is going to differ depending upon what type of SBA loan you're applying for and which lender you're working with. Now, a 7A loan through a bank is probably going to be the most standardized process and similar from no matter where you go. If you're working with a microlender or an alternative lender or a CDFI, which is Community Development Financial Institution, their process may be very different and very unique to them and how they handle that. But probably without fail, no matter who you're going to talk to, is going to have an intake application. This is one of those documents you don't need to prepare beforehand, and probably doesn't help you to fill out a generic application form, because they're going to have you fill out theirs, because you're going to, authorize the use of information and all of that kind of stuff. So they're going to have an intake application that might just be on their website. You might need to contact them first, but typically you could probably just do it on their, the website. Then you're going to have a conversation with a loan officer. If you can't have a conversation with your lender, that would probably be a red flag to me. I would want to have a conversation with my lender first to be able to ask questions and make sure they actually understand my business or your restaurant and how, what kind of details are specific to your. So you're going to talk with the loan officer, share details about your business, your restaurant's plan, your personal finances, all that kind of stuff. Ask all the questions you might have, what's a typical rate and all that stuff. Then you'll submit all your documentation. You probably will have the option during your intake application to attach documentation to it, or that might be follow the loan officer question. Regardless, it's going to be good to have your documentation as much as you can prepared before this point. Then when they've collected anecdotal information from you, documents, your application, they're going to send it off to underwriting. And underwriting is going to kind of go through things under a microscope. They're going to crunch numbers. They're looking for, I guess red flags, to use that again. They're looking out for the things that could cause this loan maybe not to repay. So they're doing a risk assessment on your loan. So there's probably going to be additional documents they might request, or questions or clarifying points. So that could be several points of back and forth. Then typically the lender is going to have some sort of internal committee review where they're going to make a decision on your loan, right? So they're going to take all of the underwriting and your feedback and all of that, the lender I worked for, the committee review was kind of the last point before closing. And so if it's a microloan, that's probably going to be the climax of that process. If it's a 7A loan, like a bank, you may not even know if that committee met. So, they might employ an SBA review process after that. But typically there's going to be a committee review and a decision. Depending on the status of the lender, for example, there are SBA lenders that have what's called delegated authority. And that means the SBA has given them the authority to just make the decision on the loan. If that's the case, the process is going to move a little bit quicker because they don't need to go and get the SBA's opinion on the loan before they can move forward. If they do not have delegated authority, or they choose to take the longer route to have the SBA sign off on that, that can extend the process a little bit. If it's less than $50,000 at one of these microlenders, that's not part of the process. The lender has the authority to make the loan or not. If it's a 7A loan, like we talked about, so one of those 250,000, 350,000, couple million, 5 million, that's gonna have to go through that SBA layer regardless if they have delegated authority or not. So there's just gonna be additional SBA forms and things to fill out and probably some documentation to submit. That documentation will be harder to prepare in advance. So don't worry about having all of the SBA forms filled out before you talk to your application. And then, ultimately there's going to be a closing. So length of the process is going to differ entirely, or depend entirely on the lender itself. If it's a microloan, I expect it to be shorter, probably a few weeks, at least maybe 2 to 6 weeks, depending upon when in the month you start talking to them. If it's a 7A loan, maybe, extend that a little ways. That might be more like 4 to 8 weeks. Again, depending upon the lender, the complexity of the process, how fast you get them documents, time of year, all of that stuff can change it. But again, ask your loan officer for expectations around that. Okay, so we've talked about the process a little bit, and I touched on, I think, eligibility briefly, but let's go ahead and bring this up. SBA loans come with eligibility requirements, meaning there are certain things that can disqualify you from getting an SBA loan. There's different things you can and cannot use SBA loans for. We're not going to go into those in great detail because a restaurant is an example of an industry that's not going to really fall outside of those qualifying rules very often. Most generally, if something's going to disqualify a restaurant applicant, it's going to be a personal issue and not because of the restaurant. And so here I have pulled up a list of what businesses are ineligible for SBA loans. So this, again, things you'd expect, like sin industries, insurance businesses, illegal activities, speculative businesses, like stuff that doesn't really involve a restaurant. But some of the things that are going to be more disqualifying are going to be like personal bankruptcies. If you've defaulted on an SBA loan before or a federal loan before, you'd be ineligible to apply. Your criminal record, so make sure you disclose that. And you're going to have some documentation around that. Just because maybe if you have a felony in the past doesn't necessarily disqualify you for an SBA loan. Certain types of felonies will disqualify you for an SBA loan. So there's some details around that are eligibility issues. And if you feel like you have something in your past that would concern you, seek that information out specifically. We're not going to go into all the details today or talk about that with your lender. Okay, moving forward, let's go back to our checklist here and let's get into talking about the documents. Okay, so again, looking at this through the lens of a restaurant, we're going to hit on startups, existing, and if it's an acquisition. And then we'll kind of go from there. So first of all, for a startup, again, you're going to have your lender application where you're going to submit information that the lender wants you to up front. You're going to answer questions and your name and who you are and your phone number and your address and all of that kind of stuff. You're then going to have to complete a personal financial statement. So this is where you'll talk about your personal assets, your personal debts, your personal bank accounts, all of that kind of stuff. You'll disclose your personal financial situation. I think it's a good practice to at least fill this out beforehand so kind of your situation. The lender may want you to fill out their own personal financial statement. That's fine. I've linked the SBA's version of that here. Probably a good exercise to do that so you've kind of thought everything through. So if you have to fill it out again, no big, you can just reference all that information. Again, this is for startups. Personal tax returns, 2 to 3 years. So make sure you've got those in order. If you have a tax accountant, get those from them. But yeah, make sure you have those handy. And then the two biggest items for the startup are going to be your business plan and your financial projections. So those kind of go hand in hand. Now, again, we have resources linked in here. This is going to link to a page on our website where we have a bunch of free business plan templates. And then you can choose the restaurant one. I've got the restaurant one page here. This is listed directly down in the description below. You can get a free business plan template, and we've got a video here that will go through and show you how to fill it out, including 5 kind of key areas that we think will make your business plan as good as possible for SBA approval. Here's a quick glance at like what that looks like. It's a fictitious example filled out, so you can copy the structure, you can write in the document, make it your own, but you can use this and follow this as a guide. And it goes into the projections down here, which, speaking of projections, we've got a video on how to create the financial projections, because Projection Hub financial projections are our specialty. And so on this list, we've got your financial projections, 3 to 5 years. 5 years is more conservative. Most lenders are probably going to need to see 3 years. They'll probably ask to see 3 years. This links to, we have financial projection templates. Now, the business plan template is free. Grab that, use that as much as you want. Our projection templates are not free, but they are quite cheap, less than $100. You can even, I think, fill out a thing in the description below to get a promo code or like a 15% discount on that, maybe 15 or 20% discount. And I can show you quickly what that looks like here. We've got these blue tabs. So this was built by a CPA on our staff, and you input your information in these blue tabs. It's very easy to do. We've got a video guide that walks you through it. We offer free support. We offer free reviews. But you'll just put in the details for your specific restaurant, your menu, and your customers you're going to acquire, and how long are people going to visit on average. And you're making these estimates about your restaurant. And you're going to plan out your servers, and if you have bartenders and chefs and the cook line and hosts and that kind of thing. Your recurring operating expenses. Will you have any salaried employees, your owner draws? And then it's going to produce all of these charts and projected financial statements that your lenders are going to need, that your business plan is going to need. And so I strongly encourage you to, if you haven't made projections yet, go ahead and do that, because if you don't use a template like that, you're probably going to have to pay an accountant, which is a perfectly acceptable way to go about doing it. It's just a lot more expensive. But yeah, encourage you to do that. Additional documents for startups, you're going to have to fill out a credit release form. They're going to do a hard credit pull, just like if you're buying a house or buying a car. The only thing I don't know for sure is when they will do that credit pull. The lender I worked for, we would wait till pretty far into the process to make sure we were confident we wanted to move forward with reviewing the loan rather than just immediately doing a credit pull. Different lenders are probably going to do that differently. So just a heads up, be prepared for a credit pull. An ID, a resume is going to be a safe thing to provide, especially if you're getting one of those 7A bigger loans. You're going to have a resume. And key employees, I think, also need to submit resumes for that. And then again, additional SBA forms after lender approval, depending upon the size of the loan. So that's going to be for startups. Existing businesses, quite a bit more documentation. Lender application, personal financial statement again, personal tax returns 2 to 3 years, business tax returns 2 to 3 years. If you're a sole prop or an LLC, I want to say you might have just a Schedule C in your personal financial statement or in your personal tax returns. That will do just fine. A year-to-date profit and loss statement or income statement, a balance sheet year-to-date. This links to a free balance sheet template and then a video on how to fill it out. Encourage you to take advantage of that. Financial projections if the loan is for expansion. So if your loan is going to be for refinancing something or working capital or something of that nature, you may not need projections. They're probably just going to maybe check that you can cash flow it as the business stands. But if you're trying to add a new location or add on a dining room or, something that is growing the business substantially, maybe you're launching a food truck or something like that attached to your restaurant, you're going to need financial projections for that to demonstrate how that expansion is going to perform and that, you forecast that you're going to be able to pay back the loan. Is really what that's going to do. So just like this template I showed you here, this is primarily for startups. But we have a template dedicated to existing businesses where you'll just be able to plug in some of your actual like historical financial numbers, and then it will build the projections off of that. So it's quite easy to do. I think this video right here demonstrates on how to do that. A schedule of your business debts, credit release form again, government issued ID, and then like business formation documentations, your articles of organization, your business registration. You know, for a restaurant, you're going to need, you have permits and licenses. So you'll submit those too. And then, you know, again, depending upon the size of the loan and the lender, you'll have additional SBA documentation to fill out. And then lastly, real quickly, if you're seeking an SBA loan for an acquisition, you're going to need kind of the best of both worlds between startups and existing businesses. So a lot of the same things we've already mentioned, but you're going to have a business plan and projections and historical financial statements. So here we've linked some of our services. So a lot of the acquisitions that we've worked on, the buyer would rather someone create the projections and the business plan for them, which we provide that as a service. Anyone can take advantage of that service if they'd like, but those are listed here. And then lastly, we've kind of got this catch-all additional documents section. So a lot of these are going to be scenario specific depending upon your collateral, your unique situation. You know, like we've got a lease agreement in here. Like if you own your building or you're buying a building, then you're not gonna have a lease agreement. But if you're leasing out, if you're a new restaurant and you're gonna be leasing your location, you're gonna have to provide a lease at some point. You know, if you're using a free and clear vehicle title as collateral, then you'll need to provide that. So this is just, you know, if you're refinancing, paying off an additional loan, you're gonna need to have that loan note. So different details here. But when it comes to actually applying for the SBA loan, if you can get these top ones of the list collected, you're going to be sitting really pretty, and your lender's going to love you, and you're going to move much quicker, and you're going to demonstrate that you're very serious about the process. So that is documentation. Again, we went through that kind of fast. We've got videos that demonstrate business plans. We've got videos to do financial projections. Those are probably the two biggest issues where business owners get a little overwhelmed and they're not quite sure if they're doing it right or how to do it. So I encourage you to take advantage of those resources in this document or down in the description below, or contact us at support@projectionhub.com if you have any questions at all. And let's continue moving forward here. Okay, so let's go ahead and touch on finding an SBA lender as the next section. So here on this checklist, we've linked several resources, 5 of them here to be specific. If you are interested in the microlender route, or just saying like smaller, maybe non-bank lenders, probably the best way to say that, we've got 2 lists here. One is CDFI list, which is Community Development Financial Institution. And then we have SBA microlender list. A lender can be both an SBA microlender and a CDFI. The lender that I worked for in Indiana called Bankable was both. They're technically 2 different programs, right? You don't have to be, a CDFI can be a CDFI and not an SBA microlender. An SBA microlender can be an SBA microlender and not a CDFI, but many are both. They're just different programs, different certifications. If you are sure you want an SBA microloan, which is that $50,000 and less program, check out this SBA microlender list. This, I believe, lists them by state and territory. So like if I go to Indiana and filter, we've got a few options here, but flagship DBA Bankable, that's where I had my tenure for almost 7 years. Great lender. But let's go ahead and look at this CDFI list. So we've got the CDFI locator. And let's say I want a loan fund. And I want to look at, let's go back to Indiana. And let's say you can do business. Let's filter that. Okay, so we've got several lenders here. I think maybe not that one business. Let's do micro enterprise. So we have several options here again. There's Bankable that I'd already talked about, right? So you can go to the website. It should give you a quick little insight into like what type of businesses they specialize. So that's one key point to know when it comes to microlenders and CDFIs and kind of non-bank ones, is they have their own specialties and their own causes and their own missions that they're trying to meet. So one might be really focused on supporting women business owners, right? May not mean they don't support, non-women owned businesses, but that might be their key focus. Or one focuses specifically on trucking or something like that. So you'll have to do a little bit more research when it comes to this, but I encourage you to seriously consider it, especially if you're a startup and you don't need $1 million to get started. Maybe if you do need less than 50 or less than 250, that could be a really great place to start. So go ahead and check out those lists. One last thing I'll point out is some of these are listed because they are like statewide lenders, like Axion Opportunity Fund covers many states. And like Grameen is the same way, they cover many states. So that's something to keep in mind. Some are a few counties, some are state specific, some are many states. Just requires a little bit more research, but very worth it in my opinion. Okay, now 7A, which is the most common. Generally, this is for the most part going to be banks that are offering 7A loans. The lender that I worked with, Bankable, also offered a 7A loan called a Community Advantage loan that went up to $250,000, now $350,000. So again, as you can see, there's a lot of overlap, and I'm making some generalizations. But here we have two lists. In parentheses, we put 1, if you want to find the lenders, 2, if you want the lenders to find you. Now, maybe letting the lenders find you sounds more attractive, but just a caution to you. But let me bring up this tool just to show you real quick. Here's where you'll input all your information, and then it'll get blasted out to a bunch of lenders, and then they can opt in to like talk to you or contact you. So that's a great approach if you just want to go quantity and just get some conversations going. But those lenders may not necessarily all be the best fit for you. They just might be saying yes to everything, and they're trying to, so that my warning to you could be that could just take a lot of time. There could be a lot of people that want to contact you, and you got to kind of filter for that. The other option is a tool that we created right here, where it has all the historical SBA lending data in here, I think for the past 5 years. And you can do some things here, like let's say we want to look in California and we want to see full service restaurants, and we want to see, let's do new business, 2 or less. So here we can see who in California is making the most SBA loans to startup restaurants. And this might be really helpful, right? Like if we take away this and we see that Bank of Hope is the top one, US Bank is the second one, and then let's change this to startups again, 2 or less. Now it's US Bank, Wells Fargo Bank, and PCB Bank, right? And so that list changed, but this might be, and you can see like what an average loan amount size might be. This is a kind of helpful tool to maybe help you dial in on like who's the actual right lender, or who's actually demonstrating that they are doing the loans that I want. My encouragement to you might be, of course, have a conversation with if you have a hometown bank that you've banked with for a long time, have a conversation with them first. They may be really interested in specialize in a restaurant loan and they want to work with you. But a lot of times people get kind of salty if their longtime bank doesn't want to lend to their startup business. And I just want to encourage you to say like, that just might be outside of their wheelhouse or their expertise. And this is a type of tool that can help you dial in if you are interested in working with, a bank or maybe a more sophisticated SBA program that's going to be a little bit larger dollar amount. This can help you maybe figure out where to start because they have a track record of working with the type of business that you are in the startup restaurant. So that's why it's prefaced that way. One's going to require more work and homework from you versus kind of sitting back and letting them come to you. But there's still going to be work. It's just, I guess, a matter of if you want to do it up front or if you want to do it as you're filtering through different applications and that kind of thing. And then 504s, we haven't talked about much. Still something I encourage you to look into if you want to kind of consider all of your options. But I don't think personally, in my experience, CDCs or 504 loans are going to be the best fit probably for a restaurant. Usually I would say high dollar businesses, manufacturing businesses, like those seem to be more of a sweet spot for 504. So that is hitting on SBA, finding an SBA loan. We've got a video help doing that. But again, if you're curious and you want to contact us and say, hey, I'm an existing restaurant, or I'd like to open up a restaurant in New Jersey, who should I talk to? You can send that to us, and we support@projectionhub.com or in a comment down the video below, and we'll send you some pointers in some places maybe based on our research where we would consider checking out. All right, so we've covered a lot of different points, and I think the last thing I want to talk about here is I've got a list here of recommendations to improve your approval chances. These are not guarantees to get your loan approved. So if you do all these things and you still get declined for an SBA loan, I'm sorry, but I do think these are going to be helpful key points to give you your best chance. Okay, so first of all, probably obvious, be prepared. Have as much documentation ready as you can when you go through that application process. You're not going to be able to have every single thing that you need, and they never ask you for another thing or another signature or another document again. There's going to be questions. There's going to be things you need to fill out. But if you can have, if you're a startup, if you can have the PFS, personal tax returns, your business plan, your projections, your ID, your resume ready to go, that's an amazing start. They're going to know you mean business. They're going to probably try and expedite it a little bit because they know you want to move quickly. You could probably go on their specific website and see what their required documentation is going to be. So you might even be able to complete more things, but just be prepared. And if that's not necessarily just in being prepared with the documents you have, but be prepared to be ready to do what they need you to do and to move quickly. Of course, you can move at your own speed, but when I was a lender and we would have someone say they were serious about moving quickly, and then it would be weeks before we would hear back from them collecting documents, and then the business owner would come back and say, okay, here's the document you need. Are we ready to go tomorrow? Like, have those right expectations. Like, they can only move as fast as you allow them to. That being said, point number 2, have the right expectations. On this checklist, we list a few, so I'll touch on these quickly. Personal guarantees. When I was a loan officer, many people would come to me and say, hey, I want to keep the personal and the business separate. That's really good advice when it comes to like bookkeeping, bank accounts, that kind of stuff. It is very unrealistic advice when it comes to co-signing on a loan or signing onto a loan. You will be expected to personally guarantee a loan for any owner over 20%. That's just the nature of an SBA loan and just most loans in general. So collateral will be expected. A lot of people think because it's an SBA loan, you don't have to have collateral. That's not true. It's more that they want as much collateral as they can get. But if there is a shortfall, then the SBA can help kind of cover that gap. So restaurants are an example of, there's some equipment because of maybe your kitchen equipment, maybe some tables and chairs, but likely not going to be enough to cover the whole loan. And so they will ask if you have personal assets to pledge. So just be prepared to offer that and what you're willing to offer and what you're not. So if that's free and clear cars, a second mortgage, you name it. There is an owner cash investment requirement. So if you need $100,000 to start your restaurant, the lender's not going to give you $100,000. They might try to give you 80 or 90, but I think 10 to 20% of the loan request is your portion to contribute to that. You can borrow that from someone else if it gets paid back after the SBA loan, but just as a rule of thumb, you need to have that expectation. We already talked about eligibility a little bit. And then lastly, your deal will need to cash flow, show sufficient cash flow. So a lot of lenders will calculate debt service coverage ratio, and they want to see, 1.25 is probably average, 1.15 might be on the less conservative side, 1.35 or higher on the more conservative side. And that basically just means sufficient cash flow. A lender doesn't want to give you a loan if it's really close in the margins that you might be able to pay back the loan. Only if the business, really hits the projections, they're going to want to have some wiggle room there. And so they're going to have a debt service coverage ratio expectation. You may ask the lender what their debt service coverage ratio expectation is, and then compare your projections to that, or your financial statements to that. Just keep that in mind. Okay, third point, we already talked about this a little bit. Find the right lender for you. Not necessarily it has to be your hometown bank or where your loan broker wants you to go. If you're working with a loan broker, it can be a wonderful resource because they can help you do the legwork to find a lender. But just keep in mind that they are getting paid a finder's fee from the lender if you go there. So they may not always have your best interest at heart, the right lender for you, the right interest rate for you, etc., because they want to get their finder's fee. So they're just going to send you to who maybe has the highest approval, but maybe that lender isn't the most friendly terms or experience or whatnot. Point number 4, share the dirty details because they will come out eventually. So save yourself the time and energy and embarrassment. So if that is, criminal history, reasons for a credit score that's less than stellar, if you're an existing business, maybe confusing financial line items, that kind of stuff, just be prepared to share that with your loan officer early, because you can find out, will that disqualify you, or what do you need to provide to get around that thing? So just share that information up front. Moving on, accurate financials and realistic projections. Our video guide that shows how to create financial projections will help you do this. We offer free reviews here if you create projections with one of our templates. But one of the big red flags as a lender was when someone would hand you projections or financial statements and they didn't make sense or didn't look good or didn't seem accurate, and then asking questions about those, and then the business owner would go back and then come back with a different set of projections. That just creates some concern. So do the effort to make sure they're accurate, make sure they're realistic before you provide them to your lender. Ditch the really long and generic business plan. If you're a startup, again, we've got the free restaurant business plan template. I encourage you to follow that, use that, watch the video that shows you how to strengthen that business plan. But in general, restaurants are not novel concepts. They're not overly complicated business models. So don't write a really long business plan because you're trying to explain what a restaurant is. Your lender knows what a restaurant is and how they operate. So focus on the really important details. Focus on, what are you doing that nobody else is doing? What is your expertise? What is your strength? What is your team's strength? Your financial preparation. Like, focus on the details that are going to actually make a difference in that process. Strengthen your application personally. So these are some things you can do to basically be prepared in the event that maybe your lender thinks you're close, but they're not quite comfortable enough to move forward. Ways to do that would be adding outside income to your loan application. That could be, if your spouse works a full-time job and it's a good job, you can add them as a cosigner because that business is detached from, or that income is detached from the business. Same thing with an outside cosigner. Instead of waiting for your lender to come to you and say like, hey, can you get a cosigner? And then you got to call your dad and it's like, hey, I really want you to be a cosigner on a loan. And like, that could be uncomfortable. So have that conversation before you have to, just say like, I'm not needing a cosigner right now, but in the event that I did to start my restaurant, is that something you would consider? And kind of get that beforehand so that when the lender asks you if you could get a cosigner, you could say, yes, I think I might have somebody. That will just save you some time there. Know what personal collateral, again, you'd be willing to pledge if it comes to that. And if you're not willing to pledge it, and knowing when you're okay walking away from that. And then lastly, make sure you as the owner or your leadership team, kind of your startup team, has ample and relevant experience. Another red flag for lenders is if they don't think you know what you're doing or what you're getting yourself into. And so if you have all of the experience necessary to start and run a restaurant, talk about that in great detail in your business plan and with your loan officer. If you're coming from maybe an industry, or maybe this is your first time doing this, talk about what transferable skills you have that will be relevant. But then you also need to talk about how are you supplementing your experience with someone else who has experience, whether that's a partner or a key employee or a manager or someone like that, to ensure that your lender doesn't have concerns that, you don't know what you're going to be able to, that again, you know what you're getting yourself into and you're going to be able to handle it. Okay, so off of my soapbox, those are the key points on how I would try to improve your chances. To kind of close this out, again, grab this checklist down in the description below, totally free. If you have any questions at all about your SBA kind of journey or application process, contact us at support@projectionhub.com. You can comment down in the comments below if you're comfortable doing that. And yeah, we've got lots of different things linked. We've got business plan templates and projection templates and video guides and all that kind of stuff. So use everything that you can and make that for you. And we wish you the absolute best of luck in starting your restaurant, and give us a thumbs up if you appreciated this video. That's really helpful for us. So without further ado, I will bid you farewell and wish you the best of luck. Thanks.